Good morning, everyone, as we head into European trade on Tuesday, the 30th of April. Last day of April, last day of the first month of Q2. Nice sunny morning in London, although the blinds up, so you probably can't see it. But it's getting towards the summer, which can be a little bit tricky for financial markets from year to year. Volatility can kind of calm down, liquidity can kind of calm down. So that's something we kind of need to think about over the next few months. But cross that bridge when it comes to it. I mean, nice sunny mornings always put you in a good mood, don't they? Maybe that's good for your trading. But anyways, into markets, what's going on? A pretty similar data, or news flow, should I say, to yesterday. Japan's yen surges against dollar. Yen intervention is a lost cause worth pursuing. Yen clings to gains after suspected intervention. Again, over here, Japan's top FX diplomat. So, all these things, yen wobbles after volatile start of the week. But volatile start of the week doesn't really do it justice when it comes to the Japanese yen. But it's kind of all about the Japanese yen now, all about intervention, which kind of, to me, says the markets don't really have a lot else to talk about. I mean, okay, it's great that Japan jumped in and sold a bunch of dollars and bought a bunch of yen and sent dollar yen 600 pips lower. It's not something that happens commonly, so it is a pretty, if you want to call it a historical event, you can. But it's not really a tradable opportunity now at this point, is it? I mean, the question is, does it continue to go lower? And you got to think about dollar yen. The reasons why dollar yen has trended higher over the last number of months is simply due to the fact that the US economy continues to outperform the Japanese economy. Yields are higher in the US than they are in Japan. Japanese yen is susceptible to moves in US bond yields. You've got interest rates in the US higher than that of Japan and will stay higher for a prolonged period of time. So, those reasons don't change though. Yeah, they can jump in and sell a bunch of dollars, buy a bunch of Japanese yen, but that doesn't really change. I'm not sure really what happens with dollar yen from here. I mean, it's still realistically, it's long. I mean, you've just now got the central bank who have pretty much given us that 160 level as a line in the sand. Do the markets have another go at it? I mean, I think they tried to yesterday, and there was a bit of a move back lower. I'll have a look at the charts in a minute, but yeah, I mean, I personally I'd stay away from that. I mean, I would probably back a move long straight up into it, just because I know kind of how markets work with these type of things. But in the months prior to the last intervention, we saw pretty broad-based US dollar weakness. I'm not sure that's really the case now from a personal point of view, but if we come across to this, you can see the Japanese yen relatively mixed, still down massively over the course of this year. I mean, that intervention didn't even get it through Friday's lows, so it's still extremely weak. Hasn't changed the picture too much. Crazy moves last Friday across the Japanese yen, but anyways, on to other markets. Equity futures mixed across the board. You can see US equity futures kind of red, but they're all pretty much flat. Same with European stocks, they're kind of all green, but all pretty much flat. Asia Pacific equities, the Nikkei up 1.5%. That obviously likes the fact that the Japanese yen is being propped up. Oil down slightly. Talks of a ceasefire in Gaza. I mean, they've had many occurrences of talks about ceasefire in Gaza, and that hasn't really played out. So let's see if this time is any different. Bond yields up across the board. They were down across the board yesterday. We'll see how that has to pan out over the rest of today. But you'd have to imagine they won't sell off too far unless you get any sort of dovish surprise from the Fed tomorrow. The US dollar higher across the board. Kind of the expected reaction, the dip being bought in the US dollar, which is understandable at this point in time. Your Aussie's been whacked in the overnight session. Retail sales, a big miss on retail sales when it comes to the Australian dollar. Kiwi dollar kind of in line with the Australian dollar, down across the board. The Canadian dollar, sterling, Japanese yen, bit all over the place. Swiss franc, a little bit of strength, but not as strong as the US dollar. So not too much to see there across that. Economic calendar, economic day today. Chinese manufacturing PMI slightly positive, slightly above consensus. The Caixin manufacturing PMI above consensus. The non-manufacturing PMI not quite having the same amount of follow through. So not really. I mean, a couple of positive, one negative. Not really all positive or all negative, which is all positive doesn't go in line with the previous month's economic data. So Manufacturing sector, okay, in China, so still not a bad number for the Chinese. GDP figures in France, relatively strong today. 0.2 versus consensus 0.1. Annualized growth 1.1 versus a consensus 0.9, and the previous was 0.8, but that was, and also revised from 0.7. Retail sales in Germany positive month over month, above consensus, although you did have the 1.9 from last month, revised up to 1.5. So some relatively positive economic data from the Eurozone today. Then inflation comes out slightly higher than anticipated from France. So your German inflation slightly lower than anticipated yesterday. French inflation slightly higher than anticipated. So what does that mean for the Eurozone a little bit later on? I guess we'll have to wait and see, but probably in line with consensus then, judging off those. But what else to really what else to go off? I mean, Spanish GDP, pretty strong, quarter over quarter, year over year, both positive. So kind of positive numbers in the lead up to this European data. A little bit later on, what that has done is it has caused a slight bit of a bounce back in the euro. But you can see pretty broad-based US dollar strength overnight. Euro Aussie, Kiwi, Euro Sterling selling off overnight. Dollar Swiss, dollar CAD, dollar yen all up overnight. That obviously drags the dollar index with it, which is the expected reaction I was personally looking for heading into the rest of this week. You got some technical breaks on sort of on the Aussie, on the Kiwi, euro dollar testing the lower end of this kind of flag on your higher time frame. So, technically there's some levels to be broken on these. The dollar yens, though, that's an interesting one. Doesn't really want to go past 155, struggling multiple times to get below 155. Now making an attempt back at these kind of highs up here at 157. So let's see if we break through that. That'll be the markets kind of taking the mick out of the Bank of Japan a little bit. You think if they decided to make their way back up to 160. Equity markets relatively flat and probably likely to stay that way, certainly until tonight. You got the Fed tomorrow. You got some earnings reports out. You can see see after the close tomorrow. You've got Amazon. You've also got McDonald's, which is a component of the Dow, but only 5% of the Dow, the McDonald's is. But you got Amazon, obviously heavy weighting towards Amazon, and the Nasdaq something like 8%, and then 4% in the S&P. Apple, then you've got that up 10% on the 10% in the Nasdaq, up over 5% in the S&P. So big weightings when it comes to Amazon and Apple in these data releases or in these earnings releases, and then obviously in the weightings in the stock indexes. So as I said, I'm personally not a trader of individual equities, but you've got to keep an eye on those types of things when you've got the actual index to play around with, especially when the weighting for those indexes is so high. You see that last week we had Google and Microsoft, after that weak economic data, that strange stagflation print on Thursday of last week. You got the pretty aggressive sell off the back of that, and then back end of the day kind of reversed completely by Microsoft and Google. You can have a look at the S&P, the Dow Jones, or the Nasdaq for both of those. So we'll kind of have a little bit of a wait and see for later on, I think, when it comes to stock indexes. You can see the 10-year yield continuing to pull back, the 2-year yield chopping sideways, but it's kind of a bit of a healthy pullback on these. I'd still probably back a move higher on both of these, but big upside on Thursday of last week on both of these with that stagflation print has given it back. 2-year yield looks like it wants to go again. 10-year yield looks like it wants to go again, but can't imagine too much action before the Fed. Gold breaking to the downside. You can have a look at this bit of a wedge you got breaking to the downside. Again, makes sense if you were to get a hawkish Fed, which would be the sensible thing to do. I mean, Jerome Powell doesn't always do sensible stuff though. Just a core PCE like up 4.5, is it 4.3 or 4.5? I can't remember the exact figure, but up over 4% annualized quarter over quarter core PCE. That is over 4% annualized inflation on the Fed's preferred metric of inflation, and they're supposed to talk about interest rate cuts. I mean, historically, maybe not since COVID, but historically, when you go back and you think years, say even 5 years ago, 4 years ago, even 3 years ago before inflation kicked off, just after COVID, but historically that's hiking territory. And now just because we've had double-digit inflation, you think 4% is okay. still 4% on the double digits we've had. So just insanity to even consider interest rate cuts, in my opinion. But I think they are reluctant to keep interest rates where they are at to not cripple the economy. But if inflation continues to push higher, I think they're going to have to cripple the economy at some point. So a difficult position for the central bank to be in, especially with growth missing estimates by a large amount and inflation still continuing to rise. Not a situation where the central bank would want to be in, but that's the situation they are in, and I think they're going to have to prioritise inflation over growth at some point, and they kind of have been prioritising growth over inflation, or want to prioritise growth over inflation. So let's see what they do tomorrow. Let's see what Amazon says later on today. Equity markets probably one to stay away from today. Let's see what Microsoft say later on, but then into the Fed tomorrow, which we'll break down a bit more detail in tomorrow's video. I see the long US dollars. US dollar can go long, or if the US dollar can go long when yields are moving lower, that's a bit of a discrepancy. If yields start to push higher again, that's further positive for the US dollar, leading up to what should be a hawkish Fed if they had any cop on tomorrow. That kind of makes sense for dollar upside, doesn't it?